Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada. And I'm on a mission to become the Google Map for hardworking Canadians seeking financial freedom. And today we have a very special guest here for you, Jayson Lowe, my CEO of Ascendant Financial, also my personal advisor on my whole life insurance policy need. I have him as my special guest because he's a true wealth hacker. He's owned multiple businesses, not just in whole life insurance space, but he's also owned Amazon and business, wholesaling business, as well as real estate investment. So today, welcome, Jayson.
Thank you so much. It's great to be here in the studio where it all happens. I'm really honored to be here. Thank you for having me.
Thanks for coming in. The reason why we got connected is because I have this need. You see here, this is a nice studio, and I bought this property as well as it's an office condo in Oakville, and I also have the next door unit. And a couple years back, we decided to purchase this property, and then I realized that, hey, like if anything happened to either Erwin or we would be in big financial trouble. And that got me started thinking about buying life insurance, whole life insurance. I mean, I had some in life insurance before, but I just felt like it wasn't big enough. And that's why we started talking and connecting.
That's right.
And you introduced me to this whole life insurance policy that I wasn't really even aware of. And so tell me a little bit about that and why it's such a great compliment to our real estate investors in general.
Oh, wow. Well, I haven't met an active real estate investor yet who doesn't owe a lot of money. Typically they're in debt. Yeah. And when we looked at the insurance need to say, okay, God forbid if anything were to happen to you or to Erwin, we needed to have a tax-free windfall of money that would show up exactly when it's needed the most. And that really, in my humble view, is the best definition of an investment, one that pays the most when it's needed the most. So we took care of the death benefit element, which is typically backward in terms of how we go about it as it relates to becoming your own banker, the infinite banking concept. What we described, and you ultimately decided to do, was creating a pool of financial value by utilizing this life insurance instrument, which is a dividend-paying participating whole life insurance contract, or ideally a system of contracts where you have a quantity that is more than one. And so you and Erwin got off to a great head start implementing that program. And you've been able to, Erwin had shared with me, you've been able to utilize it as well, where you're borrowing against that daily accumulation of capital called cash value and utilizing it for any purpose. But if you think from a real estate investor's vantage point, if you can grow a pool of financial value, cash, and you can borrow against that accumulation without interrupting it.
Kind of like line of credit, kind of like home equity line of credit built in.
That's actually an interesting train of thought. So if you think about it, if you had access to that line of credit on demand, on your terms, where you completely control the repayment schedule, and you have a death benefit thrown in on the side for good measure, that takes not only a lot of the risk off the table, but it also adds advantage. If you were to compare what you're doing alongside someone who's not practicing this process, you'll get to take advantage of high caliber opportunities that track you down much faster than someone who has to go through all the traditional hoops and lengthy nosy credit applications, personal guarantees, examining your financials, you name it. And the loans that you're accessing from the life insurance company are not reported to TransUnion or to Equifax. Those are private loans.
Yes, I can attest to that.
Isn't that good?
At this moment. So we set up the whole life insurance policy on Erwin and myself, as well as my kids.
As the kids,
A small policy for my kids, on my kids. And it's kind of like buying real estate in a way. So I know it's a complicated concept, but it is truly like buying real estate. You buy, you contribute, make a annual contribution. You can also make monthly contribution. You buy into this asset. Gives you the death benefit that we mentioned earlier. Essentially, okay, if I die, I get this much. That my estate or my kids or Erwin would get this much death benefit. But at the same time, by depositing this chunk of money into my policy, the policy, actually the cash value of the policy grows
daily
on a tax-free basis.
Yeah.
Now, just because I put aside a portion of the premium into the policy, so a large chunk of cash into the policy, it doesn't mean that I don't have access to that money. I can also borrow against it. Just so kind of like similar to real estate in a way. You buy a house, and when it appreciates, you could still access the appreciation via a home equity line of credit. But except in the case of the whole life insurance policy,
you own the lender.
Yes. So the whole life insurance policy is a participating with the profit that the life insurance company is generating.
Yeah.
So you are also borrowing against it.
Yeah.
And then so you would be able to make money within your policy while still accessing your cash value within the policy. So it is very similar to real estate in that way. And so then it allows me to, kill a few birds with one stone. The first one is to cover my potential risk of in case anything happened to either Erwin or I or all of us. And then the second thing is that it also allowed me to cover my tax liability.
Right.
When you talked about, you have never met anybody that has not had any owe a lot of money as real estate investors, one of the biggest thing that you would owe is terminal tax.
Right.
Yes. So everyone is required to report terminal tax. Yes, death and taxes, you won't be able to avoid it even if you die in Canada anyway. So you would still have to pay tax. And so this whole life insurance policy allows me to also cover a little bit of my, hopefully the full amount of my future tax liability.
Absolutely, which is so important.
Yes.
So important.
So you know how our tax liability generally, there's an upward trend with the real estate market. I know it's not the case right now, but the truth is that generally over the long term, if you're not selling, there is an upward trend. So this whole life insurance policy also has that feature. The death benefit will go up, right?
It sure does. Yeah, the death benefit will either increase monthly or annually, dependent upon the frequency that you're depositing premium into the policy or the system of policies. And what real estate investors tell us every single day, and we deal with real estate investors coast to coast, not one of them, if you can believe this will probably shock you, not one of them has ever said to us that they're feeling like they're not taxed enough. But what they're telling us is they say, look, not only are we able to utilize it to improve or to expand our real estate investment objectives, but we're also able to utilize it for all those other ancillary things. Our property accounts, where we need money, ready access money for unexpected repair, unplanned vacancy, bad debt, all those things that can really, really put a stranglehold on your cash flow. And without cash flow, whether it's your real estate investment business or whether it's your day-to-day full-time job, without cash flow, you're done. Yeah. And so if you can maintain this aquarium of capital, this cash value that keeps rising every day uninterrupted, and that's the key for listeners and viewers to understand. This total cash value cannot go backward. So when the stock market falls, cash value rises. When the economy recedes, cash value rises. When the real estate cycle is not in your favor, cash value rises. Which is right now. So, and I made a point earlier that's so important to emphasize, you co-own the lender. So if you compare this to how you traditionally finance real estate, if you were able to walk into the lender and say, listen, these are the terms that I want. I'm going to control the repayment schedule, the time frame, the amortization schedule, etc. The lender is going to look at you like you just landed from planet Mars. But with the life insurance company, you co-own the life insurance company, so you have a contractually guaranteed loan provision. What real estate investor would not want access to a guaranteed loan provision? And so, of course, explaining the concept, educating someone on the concept can't be achieved in a 10-minute video or a podcast episode. But to immerse yourself in discovering it and learning it is just so important, because it opens your eyes up to a whole new financial world. And the longer you wait to do that, the more you penalize yourself.
Yes, the more expensive the whole life insurance policy is going to get. Well, I recognize that. The other thing is that like the feature, I mean, we talked a lot about the benefit as well.
Yeah.
I think using my own personal example is that recently, after we set up the whole life insurance policy, we have been borrowing against the policy just to fund the Wealth Hacker Conference that's happening. And Jayson is going to speak there as well. So we are funding that whole Wealth Hacker Conference using the funds from the whole life insurance policy. And where, like you said, we are determining our repayment terms. We are, the interest is being, the debt is not being registered on our personal credit report because it's a private loan between the insurance company and ourselves.
That's right.
So it's not being recorded. So it provides a lot of flexibility.
Yeah, and peace of mind.
Yeah.
Like, what a peaceful, stress-free way of life it is financially if you can rest easy every evening knowing that your net worth is going to be larger tomorrow morning than what it was the night before. That's a very peaceful, stress-free way of life.
Okay, I'm going to talk about number because obviously I'm an accountant. I need to talk about numbers.
Shocker.
What's the percentage of return within the policy?
It's infinite.
I know, but our listener do not believe in that. We need to have a percentage.
Yeah, it's whatever you want to engineer it to be. So everything begins with what specific financial objectives do you have? How much capital is required to achieve them over what time frame? When you put the policy or the system of policies in place, you can't guarantee the policy owner the time, right? I can't guarantee that you're going to have all the time that you need to set about achieving all of your objectives, but I can guarantee the money.
You can guarantee the money.
Absolutely. So you don't know when you're going to die, or at least I've never asked you that question. I hope you don't know when that's going to happen. But everybody who's watching this, everybody who's listening to it, you are going to die someday.
Yep.
Right? You all have a best before date. And if you were to determine today, if that event occurred, God forbid, how much money needs to show up right away, tax-free, to take care of finishing the objectives that you had set out to achieve, but you didn't have the time because you died, and delivering the precise amount of capital needed to get those objectives done. That's what engineering a policy means, if you've ever heard somebody describe it that way. If you want a rate of return, so if you think of that in the traditional sense of the word, go invest in mutual funds or the stock market or other financial tools that you can utilize to go chase a rate of return. Rates go up, rates go down, process of banking keeps on going on no matter what. A fatal error in thinking is that the process of becoming your own banker, the infinite banking concept, has anything to do with rates. It has everything to do with how you finance the things that you need in life. The policy is your reservoir. That's your warehouse of wealth. You borrow against it without interrupting any of its accumulation. I don't know of any other financial instrument out there that exists that provides all of those attributes. And I've been looking. I've been doing this for 15 years now. And another point that I'll mention that's just so important is that when people are researching this process and they're discovering it and they're thinking about how can this be an advantage for me, for my business, my real estate investment activity, it's not an either or. So it's not, hey, learn how to trade options or become my own banker. Learn how to expand my real estate portfolio or become my own banker. It's an as well as. Because you cannot achieve a greater rate of return doing anything if you ignore who's in control of the banking function as it relates to that thing that you're doing. Isn't that good?
Yep. Sounds great. So
I feel like we have a studio audience. We should have like an applause button or.
That's awesome. Now, I have to come back a little bit because
Sure.
our audience may not know who you are.
Okay.
I know I mentioned a lot of credential, and we share a lot of we both love self-development as well. And I know that you do Amazon business as well, and you own an Amazon business, and then you're also a real estate investor.
That's right.
At least you started as one.
Yeah.
I don't think I ever got a chance to ask if you are still one.
I am, and I lend money as well.
Oh, cool,
Yeah.
cool. One of the examples that I get most, or questions that I get asked most, is about how to use this whole life insurance policy to buy Tesla.
Oh, wow. Oh, that's really great.
I know people
Do you want to go shopping?
to get the
Let's go buy one, and I'll show you how to do it. I mean, it's
write off as well because Tesla is
Yeah.
an EV, so you get a bigger write off
Oh,
these days.
that's right. Yeah, yeah.
And then, but we also need the money to do the whole life insurance policy.
right.
How can I have both at the same time?
Well, that's a really good question. I mean, if you've accumulated enough in your pool of financial value, right, your total cash value, and you can borrow against that accumulation to go get the vehicle, you control the repayment schedule. So if you have earmarked a specified amount of money to go into your policy, and hopefully that specified amount of money is not consuming 100% of your free cash flow,
Yep.
because that would really not have been engineered properly.
Yep.
So you also want to have some additional free cash flow that you can utilize to repay your policy loan over a gradual and incremental time frame. But you control that completely, like completely. And you're right. I'm involved in a number of different businesses, 7 operating companies to be precise, all of which are profitable. As an accountant,
That's
you'd be
awesome.
very proud
Yes.
of that. I'm a chartered life underwriter. And very proud to be one. A member of the Conference for Advanced Life Underwriting here in Canada, where we get to converge on Ottawa once a year, typically in the month of May, and we get to meet with the Minister of Finance office, with members of Parliament to advocate for small business owners, to advocate for people who are feeling as though maybe there's a bit of onerous taxation going on.
Oh yeah.
And so I'm very privileged to be a part of a great fraternity of very intelligent professionals across the country, comprised of chartered accountants, chartered life underwriters, attorneys, and people who are in the business of advising people who want to improve or expand their wealth.
Yep.
And you want to do it in the most tax advantage way. And if you think about going back to Tesla for a moment, so I was in Boston. I got to tell you this. So I'm in Boston, and I'm at an MDRT conference there, which is $1 million roundtable conference. And I see a Tesla dealership. So I walk into the dealership, and the salesperson greets me, and there were 3 models that were on display in the showroom. I asked the gentleman, I said, wow, this one's really nice. And what's the investment? He goes, well, depended upon how you put the vehicle together. So it worked out to be like $180,000.
You must be looking at the most expensive
Well,
one.
I thought to myself, my goodness, okay. If I wanted to purchase that vehicle on the spot, how would I go about doing it? If I had to finance it, you don't get financing without qualifying. They're not mutually exclusive. Like
Yeah.
you don't get financed unless you qualify. Well, what is the qualification process? Looking at credit history,
Yep.
income verification, lengthy nosy credit application. You just cross your fingers that you're going to get approved, and then if you do, you're going to make a payment on the financier's terms, not yours.
Yep.
Makes sense so far?
Yep.
Right? You get it. You know this. And alternatively, if I made a decision to buy it on the spot, I call the life insurance company and I say, listen, I need a policy loan for $180,000. I have more than enough
Yep.
of a
Accumulated.
reservoir to borrow against to make that financing decision. Well, the insurance company would ask, do you want us to directly deposit that money into your checking account or mail you a check? There's no income verification, no qualifying. They don't even ask me what I need the money for because it's none of their business. I'm the policy owner. The insurance company is just the administrator of the contract, not the owner. And the owner calls the shots. Make sense?
Yeah.
So then the money shows up. I buy the car. I own the car free and clear because the lien for the loan, the policy loan, is on the death benefit of the insurance policy, not the car.
Yep.
So who's in a position of total and absolute control?
Yep.
The policy owner.
Yes.
Right? And if you can do that for a Tesla, you can do that for anything that you would otherwise pay cash for, lease, or finance. And that covers 99.98% of the Canadian car buying public.
Yeah.
They're either going to pay cash, lease, or finance it. Well, now we've introduced a new method, the infinite banking concept, and clients are telling us, like, this is amazing. Like, I'm not accustomed to being in a position of total control. Most people aren't.
I mean, I'm still learning this process, so I'm still not quite used or understand this whole concept on my own, but it's nice to have you here explaining a bit of it.
It's an honor.
So, last question.
Yeah.
How are you teaching your kids? I'm like all into like kids' financial education these days. And I read the book about like 5-hour school week, and they talk about how they involve their kids in the business. And I just wanted to ask you this question as one of the most renowned wealth hacker out there. Tell me how you educate your kids. I know I saw all these like beautiful dancing competition pictures.
Yes. Well, thank you. I'm a very proud father of 4, and my kids have been around this their whole lives, and my oldest is 14.
Wow.
And his name's Jackson. Hey, Jackson, how you doing? And Jackson has already repaid his 3rd policy loan, and he's 14. So the first thing that we did is we introduced R. Nelson Nash, the pioneer, the developer of the concept. Our kids all have a copy of R. Nelson Nash's book.
Yep.
And then we started to teach our kids through simulation. We find that that's the best way to learn, is to simulate, right? So simulate means accessing a policy loan, gradually repaying it. Now, of course, the kids had to be at an age where they conceptually understood that if you borrow money, you got to pay it back.
How old was Jackson?
Jackson, his first policy loan, he was 9.
Wow.
Yeah, and his first policy loan was for $55. Yeah,
that's a lot.
It really
of money.
broke the bank. Said no one. But he repaid that. It took him 7 months to do it, and then he requested a second loan and a third loan. He's paid them off. That's since extended to my nephews, my nieces. We have an annual family banking meeting.
Oh, cool.
Where we bring the whole family together and we talk about how we're keeping the money in the family. And that family banking is something that I'm going to talk about a little bit at the Wealth Hacker
Wow,
Conference.
that's awesome. I can't wait, because I'm like very parent focused right now. So tell me a little bit about what Jackson used the $55 for.
He bought a video game.
Oh, yeah?
Yeah. So he had saved up the money.
Yep.
He already had the money. And I asked him, I said, well, if all you do is hand the money over to the video game store and you get the video game, how much money do you have left? Took him a moment, and he said, none. I said, you're absolutely right. If you can borrow from the family bank and repay with interest, and he's 9, kids pick up on this much faster than adults do. And pay interest. What does that mean? It means you're going to pay back more than you borrowed. Okay, I can do that. And then by the time you're done repaying it, you'll still have all the money and the video game.
Yeah.
And he said, okay, sounds good, Dad. He wasn't asking, all of these questions around all the financial noise that's out there in the world, because he hasn't been polluted with any of it.
Yep.
The kids pick up on this way faster than adults do.
Sometimes I wish I have the kid's brain.
Yeah, if we could go in and kind of scrub the hard drive.
Yeah.
But look, I'll tell you in all simplicity, because we talked about this before recording, and you said, it's if you could explain, just give people a glimpse of the infinite banking concept in a very simplistic way. The essence of becoming your own banker is ridiculously simple, but the human nature is to complicate things. Someone or some organization must perform the banking function in your life. And it's not in your life for this month.
Yep.
It's in your life for the rest of your life.
Yep.
You're going to need the use of money for the rest of your lifetime.
Yep.
Some organization has control over a pool of money that must flow at a cost to meet someone else's need. What you're doing by becoming your own banker is you're accumulating that pool of value that can and must move at a cost to meet someone else's need. And that someone else could be you.
Yep.
It could be your extended family, your children, your in-laws. Keep the money in the family, because we've been taught, and you may have heard this growing up too, and your listeners and viewers, I'm sure you can relate to this. When you grow up, you're going to move out. You're going to start your own family. You're going to have your own mortgage, your own car payment, your own bills. Then you'll really understand. The wealthy don't talk that way. The wealthy talk about circling the wagons and keeping the money in the family. So I've been telling my kids since they could conceptually understand what I'm saying, I want your mortgages. I want your car payments. I want your business purchases, your weddings, your vacations. I want all of that money flowing back to the family banking system. What's the alternative? It'll flow away from the family. Nobody wants that, right? When you understand the lost opportunity cost of continuing to transfer your money away to someone else. Mm-hmm. And look at real estate investors. What are they doing? They're buying a deferred benefit.
Yep.
But in the interim, they're making the wheels of the banking business and the real estate business turn in that exact order. So become your own banker and start taking control of that financing function in your life. And everything begins to change. And we're doing a big event in Edmonton in October for our clients. And one of my twin daughters, Charlotte, she's 10. She's a speaker at the event.
That's amazing.
She's 10.
Yeah.
And she's like, I'll do it on one condition, Dad. And I said, what's that, Charlotte? She said, as long as I can cut out of school for the day, I'll speak at the event. I said, okay, yeah, we'll make that happen for you. That's easy.
That's awesome. That's awesome. You're going to hear Robin speak at the Wealth Hacker Conference too, only for a minute. It won't be long, but she already prepared her slide. And my daughter, 8 years old, and she's going to speak. She's so cute. So for any viewers or subscribers out there who are interested in finding out more about the infinite banking concept, I mean, in general, I do understand it.
Yeah.
Essentially, I'm just putting away my own money into my own bank rather than having it into a different bank, and then I borrow against it while my own bank is still working hard to grow that money for me in general. So if you want to understand a little bit more, contact information for Jayson will be included in the show notes. And obviously, please come to the Wealth Hacker Conference because you
will want to be there.
Yes.
Oh, yeah.
So then we can hear more about what Jayson is going to talk about the family board meeting.
The family banking meeting, yeah.
Yes, that's also very important, high in my priority as well. So thank you so much for coming on, Jayson.
Thanks for having me. It was great.
Appreciate that.
I'm not sure where I know your engineer said, okay, you got to look. There it is. Okay.
Yeah.
Hi. Thanks for having me. It was great.
Thanks so much for coming on.
Thank you.
If you like our video, make sure that you hit the subscribe button and stay on top of you will get notified every time we release the latest wealth hack video.
Awesome.
Thanks, Jayson.
Thank you. It was fun.
Yeah.